Ladies and gentlemen, this video could single-handedly make you a crap ton of money. We're going to go over what is happening to markets, what is coming next for markets. Believe it or not, I think a short-term bounce is coming. How to best prepare for what is coming next over the next couple of months. Now, there's some very clear indications of a bounce that is probably coming soon. Not a guarantee, but history would suggest that today is probably a new low, and then we kind of chop around for a bit before falling again. Long story short, here in this video, I will explain all of that and get you caught up to speed on what you need to know and what's coming next. We will also discuss what could be coming next for Tesla. In the worst case scenario, what happens to Tesla? Okay, in a more optimistic scenario, what happens to Tesla? In a worst case scenario, what happens to Tesla? When do I think the markets ultimately bottom? In what month? And then start to recover? Is 2026 going to be a good or bad year? We'll discuss all of that in this video. Hit the like button, subscribe to the channel to help push this out to as many people as possible. Share this with your buddies, your pals, your friend, your family that may be in markets or own Tesla. Specifically, this video applies directly to the millions of investors that are investing in our markets today. So first and foremost, the big question that everyone has, is this the end of the correction? Here's the problem. The problem is this trade war is now becoming so embedded. It's like you've crossed the line, okay? You've cheated on your girlfriend and that's her boundary and she'll never take you back. That's kind of where you're starting to get right now. We tariffed China. China tariffed us again today. It's becoming a lot harder to walk that back. And that is the panic that you are seeing in markets. Recession odds are skyrocketing. So just like any other, recession event, think about 2022 for that matter, it goes up and down, right? Some days or weeks, recession's going to look more likely. Other weeks, it's going to look like things are maybe okay out there. So one characteristic of this sell-off has been the volatility and velocity of it, especially this last week where the S&P is down about 7% in a week. People are throwing in the towel now at this point. Now, markets are still elevated. There's still a bull case scenario out there that is alive and well for many investors, but that is starting to really be knocked down. Now, the perspective that I will give you here in this video is, of course, the levels matter, right? The overall valuations matter, but the velocity matters as well. When you look at the SPY on a weekly candlestick chart, you now are right at that oversold level on the RSI. Going back to 2020, besides the crash of 2020, which was a crisis, this is a crisis as well, so could it get more oversold? Sure. But you normally tend to bounce when the weekly RSI gets oversold. And normally these bounces can actually be quite large, like you've seen in 2022. Every time you got to 30 on the RSI, you bounce. You haven't been to 30 or even close to 30 on the weekly RSI since 2022. Okay, so from that technical perspective, it would seem likely that we would bounce. Now, 507 is where your 100-day moving average is. That's a big level. And I expect that even if, again, we come down a little bit, call it 507, we're going to start bouncing around here. We're not going to V-shape recovery, but I think we slow down the velocity of the sell-off temporarily, okay? But I do think as recession odds rise, as the data gets worse, we will continue to fall. There is a very old saying on Wall Street, and it goes like this. Wall Street does not stop panicking until policymakers start panicking. Trump is not panicking. Powell is not panicking. Scott Bessent is not panicking. Nobody is panicking from a policymaker perspective, okay? When they start to panic is when Wall Street will stop panicking. And their day of panicking is coming. So from that perspective, I think we slow down this sell-off. I think we chop around a bit. I think Wall Street kills premium on both sides, but I don't think it is the end of the selling, okay? I think that we do go lower from here. I think you have to go lower from here with a recession that now seems almost guaranteed, and what effect tariffs will have on companies' bottom lines. This is going to hurt company margins. This is going to hurt profitability for the broader markets. And that means stocks will go lower. But I feel like maybe some people are going to get conditioned to this extreme selling. And I think the extreme selling could start to fade a bit, could start to die down a bit. Now, as I have said on this channel for a while now, once you get to 500 on the SPY, the risk becomes more at parity, okay? Where you have additional 20% downside risk at 500, down to 400 on the SPY, okay? In a really, bad case recession, you could go lower than that, but that's essentially putting you down to where you were October of 2023. That's roughly the level that you traded at for most of 2022. That's about the middle range for 2022. Okay, that is kind of the low end of my expectations. Well, the high end of my expectations, if everything went perfect, tariffs go away tomorrow type of situation, you're looking at 600 on the SPY. So at 500 on the SPY, you're roughly in parity, 20% upside potential, 20% downside potential. You're almost there now with the SPY at the time of recording this video at about 515. So this could be a moment to start nibbling at stocks, but this is not the moment that I want to be going all in or using margin or anything like that. But the fact of the matter is, markets probably will bounce from here. We will probably trade in this range between the 500-day moving average at 502 and the 300-day moving average at 550. You'll probably trade around in this range for a period, until we get more clarity on the economy, in which it looks more likely than not we could be already in a recession. Now, the earliest we will know if we're in a recession is around July, August of this year. By then, you may have another month or two of panic, but by September, October, November, we should be kind of bottoming, recovering by then. If we're, again, already in a recession. If the recession takes longer to come, then it's going to take, a little bit longer. Timeline gets pushed into 2026. But from where I see it, by 2026, we should be in the recovering phase. Now, question is, again, what does the damage look like between now and then? That's the big question, and I do think there is still more downside risk than upside risk at this point. As I have talked about here on this channel plenty of times before, there is 3 things that you should be doing right now. You should be evaluating your portfolio. What stocks do you own? What stocks are profitable, that are unprofitable? Who's going to get hit the hardest? Who's, more vulnerable for excessive downside? Small caps, heavily indebted companies that need to raise cash. Those are the stocks that unfortunately are just too risky to own here, especially if you have a lot of your portfolio in them. If we are correct on this channel, you will have a better opportunity to buy those stocks. Even if you have to sell them at a loss, it's better than watching them go to zero, potentially going bankrupt. The last thing you want to do is try to raise capital in a recession market. 2022, that did not go well for any company that tried to raise cash. And even then, this velocity of the sell-off is even more extreme. So that's number 1. Risky stocks, stocks that will not survive a recession, have no place in a portfolio unless they are a very small amount and you are willing to lose all of that, okay? Number 2, you need to not be in any margin debt whatsoever, okay? Now, with the velocity of the sell-off we've seen in the last 2 days, perhaps stocks can bounce a little bit from here, and maybe now is not the greatest time to sell those stocks and to get out of margin. But if you are in margin, let me tell you, that is the worst financial decision you could make right now. Because even if you're fully invested in quality stocks and markets do fall another 20, 25, 30% from here, you're able to use that margin at the bottom and your dollar goes a lot further. And number 3, it's pretty simple. You need to have as much cash as possible. Your cash is gaining value as we speak, okay? As stocks fall, your cash becomes more valuable. Essentially, you're seeing deflation on the stock market. So your $100 or $500 or $5,000 or $10,000, whatever your number of cash is, your dollars, your monies, are going to be worth exponentially more as you invest them with depressed asset prices, okay? $100 could be worth $1,000 by mid-year 2026. Right? 10,000 could be worth over 100,000 by mid-year 2026 if asset prices continue to decline, as I think they likely will. But I think a lot of people are going to be trapped when you get a big bounce and people are going to think that it's the end of the selling. It really just depends on the state of the economy at this point. And at the time of recording this video, Wall Street still has very lofty growth expectations on aggregate for markets. Those estimates will continue to come down. Recession odds will continue to rise. And especially as we get new incoming data, that's kind of going to determine things. And, I would expect that we bounce a little bit from here, that we don't continue to sell off at this velocity, again, because of how oversold we are. Even on the daily candlestick chart, after today's drop, the RSI is at 25.5. You always bounce when the RSI is oversold. Like 2022, every time you bounced at 30 on the RSI. Every time in 2023, you bounced at 30 on the RSI. Every time in 2024, and even in 2025 so far, you bounced when the RSI got to 30. Even back here, March 10th through the 13th, you bottomed once the RSI got to 30. Today, you're well below 30. So don't be surprised if we bottom, but don't be surprised if it's not indeed the end of this selling. And any bounce that you get is an opportunity to de-risk portfolios. And again, just to solidify number 3, cash is king. So we have established, I think a short-term bounce is probably coming. Markets are really oversold. Historically, that leads to a bounce. And honestly, there's a fair bit of panic out there in markets today. And you're due for a bounce. Now, that's a good opportunity, again, to de-risk portfolios, raise some cash with whatever bounce we get, because I do think ultimately the economy is going to get worse from here, not better. Earnings revisions are going to be lower, not higher. And that is what moves markets. Fundamentally, if you ask anyone on Wall Street what moves stocks higher or lower, they're going to have one of two things to say, or both. They're going to say, first and foremost, margins. If margins are improving, stocks go up. Well, in this outlook, with what we have now, margins are not going to be improving. Number 2, equally as important, kind of goes hand in hand. Earnings. If earnings are growing and doing better than expected, stocks go up. If earnings estimates are falling and earnings are coming in worse than expected, or markets will go down. And that is the setup that we're going to have. You're also going to start hearing a lot of companies with very cautious guidance coming over the next couple of weeks as earnings season does kick off. And I think if you're looking for discounts and good deals on single stocks, this upcoming earnings season is going to be a ripe opportunity for just that. Now, with that said, let's switch over to talk Tesla specifically. Tesla had a really bad day today alongside basically everything else, okay? Tesla's actually, off of its lows by quite a bit. Tesla's low was 217. Today you're at about 240, okay? So you still have a little bit of cushion to the downside. Once you break below 215, you're probably shortly thereafter going to hit 200. Now, if we bounce, like I think, Tesla likely bounces back into the 270s, okay? But the question is, where are we ultimately going? Not what is going to happen in the short term. And ultimately, in the worst case scenario, Like literally the worst case scenario. We're talking recession. We're talking like pretty, average or maybe severe recession. Tesla could be a $50 stock again. That is in a very dramatic scenario. That would put you back to like, roughly where you were in February of 2020. Okay. That would be a literal sell your kidney moment to buy Tesla. Okay. That is like the worst case scenario. More of a base case scenario, in my view, is between 130 and 100. That is the level I think, buying Tesla is the most obvious answer in markets, right? Best place to deploy capital by far for risk reward, right? Tesla's not bankruptcy. It's not a bankruptcy candidate. Long-term growth trajectory prospects. None of what we're seeing in markets is going to affect that, okay, long-term. That's the level in which I would go literally put all of my dollars in. Those are the levels I would margin like crazy in Tesla. Okay. Now, if we get to those levels, we'll talk about specific strategies, right? I wouldn't want to go all in on margin at, $100. If you could theoretically go down to 50, you'd want to hedge and do some things along those lines, but it's far too premature to talk about that. Now, best case scenario, in my view, we get back into the 300s, 350s, maybe close to 400. Okay. That would be like a 60-ish% rise from here. I see that as pretty low likelihood in the, near term future. Because why? These tariffs are getting to the point of no return. China just tariffed us 34%. It's going to be pretty difficult to work out a deal with China that is a good one. Right? The best thing that we could probably see right now is deals worked out with other Southeastern Asian countries like Vietnam, Malaysia, Cambodia, things like that. Okay. Trump kind of walked us off of a cliff that you can't really easily come back from. And that's why stocks have reacted so negatively over the last 2 days. So, it's going to take a lot of time. If there is deals worked out on tariffs, the damage is going to be done. And again, I think you could bounce in the short term, but that is likely not a super sustainable bounce. Okay. So that's kind of the better case scenario. 350, 400 this year. The worst case scenario is 50. A more base case scenario is between 100 and 130. That's where I think Tesla could ultimately hit. Maybe 150 is also more like reasonable. Okay. Those are my buy levels. Now, where I really see things is we're probably in a recession right now. So Q1, Q2. Okay. Probably going to be negative. Things are going to get worse between now and then. Now, what normally tends to happen is you price in all of that recession as you ultimately go into a recession. So by the time it's July, August, and we're like, okay, we're in a recession, markets are already down like 30, 40% at that point. Okay. Maybe you chop around, you start to find a bottom by September, October. And then you see a very strong end of the year recovery. If I were to try to game this out, time this out, that would be my expectation. We recover into year end. November, December historically tend to be pretty good months, especially December. That is when I would think we would have a bit of that recovery, right? I think 2026 should be a very good year. Again, we're kind of front loading this pain now. Okay. So that's where my thought is at. That's kind of my timeline. And I think by summer, June, July, August, you're probably going to be in the thick of it with markets down to some of these buying levels that I'm talking about. And again, what do you want to do between now and then? You want to de-risk portfolios. You want to get cash ready and you want to get margin ready, because margin can be a great friend if used at the right time. It can also destroy you if used at the wrong time. And I personally don't think now is the right time to be going all in on margin. I mean, in the grand scope of things, look where we are, right? I mean, you've knifed down a bit. Sure. You're still from your 2022 highs you're still up 12% from that, or your end of 2021 highs, right? You still have a lot of room to come down on markets, especially since we're talking about a recession. Yeah, you could see something like markets down here, right? 350 to 400 on the SPY. That's a much better buying opportunity. And I think in that scenario, Tesla is probably down a lot more than where it is today. So these are, again, some of my thoughts. Let me know your thoughts on this down below in the comment section. I know this is subject to change and I'm subject to flip-flopping, but this is my best guess at this point. And I can definitively tell you the best thing to do is to de-risk, deleverage, get cash ready. I think that's a universal truth at this point. And doing that and investing at the right time could make you millions of dollars, depending on, what you're investing in, where you're investing, all of that. So let me know what you think about all of this information down below in the comment section. Ladies and gentlemen, have a fantastic rest of your day, and I will see you in the next one.